I don't think stablecoin issuers are going to make that much money. Stablecoins will be basically like a zero margin product.
What else do you foresee in the future that would be worth paying attention to?
The meta that's really starting to heat up now is the savings account that pays you to 8 to 12% interest, and then a credit card that pays you 3% cash back. That's crazily better than a traditional bank. You got money from a crypto exchange into your bank account, and like they would just turn your bank account off. Every bank will have something like a bad news division. So if you have an account with a bank, they're looking at all over the internet. If your name pops up in a bad newspaper article, it goes to the compliance team and they review it. And if you do something bad, they'll just turn stuff off. It's mostly theater. It's supposed to prevent bad people from using these financial systems. They totally don't work.
Got the whole crypto world going wild. Money blockchain, she's the queen of the game. Stacking crypto like it's her claim to fame. If you want success, then take a look away.
Today's discussion is one I am very excited for because this might be the easiest way for you to experience what the future of finance looks like. It's not about holding crypto anymore. It is about being able to use it in your everyday life, buying that new iPhone, buying groceries, or buying your mom that new car she wants. There's no better person to talk about this than Mike. He is the founder of Ether.fi. Hello, Mike.
Hey, how's it going? Yeah, thanks for having me.
I've heard this project a long time ago from Arthur Hayes. He couldn't stop talking about it. And now that you're here, for people that are not familiar with it, tell me what you do.
So Ether.fi's mission is to create a full end-to-end alternative to traditional banking. So if you've used products like Revolut or Chime or Nubank, Ether.fi is building something that is, a full end-to-end alternative to those types of products and services.
And you want to be a bank.
We want to, banks are a very specific type of institution which take deposits. So Ether.fi is non-custodial, so we don't take control over users' assets. Instead, we give people all the same services, all the same benefits, like the equivalent of a checking account, the equivalent of an investing account, a credit card that they can use to spend, but while being non-custodial. So the important part about that is that we give people the ability to control their assets. So unlike a bank, we don't have the ability to take your money. The government can't come in and take your wealth. With Ether.fi, you retain custody. Plus, we have much lower fees and much higher rewards than a traditional bank would provide.
A TradFi person, if they hear this, they'll be like, oh, two questions. One, what is your business model then if you don't hold my money? Second, where is my money then? If I were to use the card, then it has to go somewhere, right? It's like a checking or like a debit card type of system.
Yeah. Well, so this is the power of crypto, right? Like when you think about Bitcoin or Ethereum or any other crypto, Solana, whatever. The benefit is when you have your crypto wallet, whether it's a hardware wallet or software wallet on your computer, when you deposit Bitcoin or ETH or stable coins into it, there is no third party that holds custody of your assets. It's self-custodial. So in other words, as long as you can remember the seed phrase to your wallet, there's no way that anybody can take those assets away from you. So it's the same with Ether.fi. When you deposit your ETH or your BTC or your stablecoins into Ether.fi, you're putting it into smart contracts, and you are trusting the code in those smart contracts. You don't have to trust us as Ether.fi. Now, to your other question, how do we make money? Interestingly, the business model is actually very similar to traditional banks. So, for example, on the credit card side, every time that you swipe your Visa or whatever credit card, the merchant, so the store that you're buying your stuff from, pays usually around 3% of that transaction to Visa, and then Visa gives us a slice of that. So we make about 1%, off of what that merchant pays. So in other words, the customer doesn't pay anything. We're taking it out of the share, from the business. And then in addition to that, if you use other parts of the Ether.fi products, like the DeFi strategy vaults, then we charge a fee on those. But that's completely transparent. It's open. You know exactly how much it's going to cost you. You can see where the assets are, and so in that sense, I think it's a much more democratic kind of system than traditional finance.
Is it a credit card or a debit card?
So it is a credit card. It's a credit card in the sense that you can borrow, and just the way that it's issued, it is a credit card. But for now, all loans on the credit card are fully collateralized. So you need to have assets like Bitcoin or Ether or whatever that you're borrowing against.
What is the end game? If it's the end game is a credit card, but how do you verify my credit?
Yeah, so, well, because it's a credit card, we do KYC. So in other words, we verify people's identity and, collect information about them. And over time, of course, we get a lot of information about how much income a person has, their spending habits, their assets, on chain, which I think makes it possible for us to eventually give users uncollateralized credit. So eventually we plan to be able to do that. But I think, frankly, more interestingly, the long-term goal is to completely get off of TradFi. Like the long-term goal is to go directly to merchants and bypass any of the credit card networks and allow people to directly pay for their stuff using their crypto assets. But that's going to take time. That's a huge initiative to be able to turn those rails on for all the hundreds of millions of merchants all around the world.
I think I've heard a lot of crypto friends. They're like, yeah, well, they're pretty wealthy, but they can't really get the traditional credit card because, the banks can't really verify their assets. Now, from what I've heard, you are trying to verify their assets on chain. So let's say I am a person that is rich in banks, in fiat. Now, can you verify that in the future?
Not at this point. But it's not hard to imagine, a time in the future where there's some sort of Oracle system that does allow you to, to actually verify people's wealth, off chain. It's funny, right? Because in the traditional world, it's the problem is the exact opposite, right? You might have, millions of dollars of Bitcoin or ETH, and the bank doesn't recognize that at all. But it's not hard to imagine a time in the future when you have the reverse situation where the default is on chain, but maybe you have some stocks or whatever in your investment account, and like your on chain credit program doesn't recognize those. So yeah, it's eventually might come full circle.
What inspired you to start this? Is it because you faced similar situations?
I got into Bitcoin pretty early. I read the white paper. I bought some Bitcoin back in 2011. And so when Bitcoin launched, like this idea of a stateless money that was inflation-proof and fully transparent was something that really appealed to me. So this just aligns with my values. I think this next generation financial system that is much more transparent, much more fair, much more democratic is something that I think is an important way of preserving and increasing the amount of economic freedom that exists in the world.
But not everybody has this idea of what they want the world to be like. Let's say if I'm just a regular crypto holder, why do I need this card?
So as a product, I would say it's the easiest way for you to use your crypto in real life. So if you have a bunch of crypto wealth, most crypto people go through this dance of, all right, you get, hopefully you're successful, your number goes up, you become wealthier, and then every couple of months or so, you take that money, you put it into an exchange, maybe you sell it for fiat or stable coins, then you send it to a custodian and then send it to a traditional bank, and then eventually now you can use it in real life. And it's a painful process, and at every stage you incur risk. Like with Ether.fi, you skip all of that. You download the app, you can get a credit card, this credit card within 2 minutes, after you set up your account, and then you directly load it with fiat and then just spend it in your real life. So for me, what that means is I basically replaced probably 95% of my banking with Ether.fi, because I can deposit fiat if you receive fiat as a salary if you want. You can deposit fiat. It automatically gets converted to stables. I can, deposit crypto and use that in my day-to-day. I can send wire transfers if I need to. So if I need to make payments or pay for stuff in the real world, I can just do that. It really does remove the need for a traditional bank as a user. And this is especially true for people in, I guess, non-US markets. Our number one market right now actually is in Brazil.
Wow.
That's like where many of our users are. Another number two market is actually Taiwan. So we're seeing a lot of growth in markets where people want these virtual US dollar bank accounts that let them save, invest, earn, spend all seamlessly in crypto while maintaining their wealth in dollars.
And it's all through an app. Is that correct?
Correct. Yeah. You can just download the iOS app and go through the whole process. I think for many people, they wouldn't even necessarily even realize that they're using crypto. You just download an app, you sign up, you can fund it with fiat. So, like in Brazil, we just introduced support for Pix, which is the most widely used payment system in Brazil. That you can pay your mortgage, you can pay your rent, you can get paid your salary through Pix. So for someone in Brazil signing up, creating the account, they wouldn't even necessarily realize that they're using crypto, because you're just depositing money and then you're spending and investing it. Like the crypto part is completely abstracted. All that complexity goes away. You just get the benefits.
I think I've heard someone, like the first few times I've heard about this project, people were talking about it being a DeFi card. And then at the time I was like, that word is going to scare some people away. But when I actually use it, it's so easy to use. It just feels like the traditional bank apps that you're familiar with. So
that's great.
I guess,
that's so awesome to
right?
hear. I mean, I think there's still room to make it even easier, but that's great to hear, because that's exactly what we're going for, is just make it super easy for people.
Another thing that I love is the transaction limit. You can just buy something really, really expensive, because back in the days, if you want to buy something really expensive, you kind of have to call your bank and be like, hey, there's this really huge transaction coming in, la, la, la. You have to explain yourself. Now you don't. And this is what I really love.
Yeah, for sure. I mean, we've had people, people buy $100,000 watches. We've had people buy cars. We had somebody pay $150,000 tax bill with the card. Somebody put a down payment on the house with the card.
What?
It's great. Yeah, do whatever.
Nice.
Do whatever you want. Yeah, it's great.
And they get cash back on all these transactions?
Correct. Yeah. So it's 3% cash back. Basically, no limit on anything that you buy.
That's crazy if the purchase is big.
Yeah. So you buy a $100,000 watch, you get $4,000 back.
By the way, really quick heads up, Ether.fi is doing something special for our community. If you sign up using our link, you'll get $25 instantly. And Mike was kind enough to give us access to their new gold card program. The rewards are honestly mind-blowing. We'll talk about that in full details later, but basically it is the first crypto card that gives 4% cash back. So stick around till the end. You'll definitely not want to miss this. There are some centralized exchange cards out there. And how is yours different?
There are many of these crypto connected cards out there. Without talking about specific ones, most of them are really bad. I mean, this is why none of them, like very few other crypto card programs, have gotten to any meaningful size, because they tend to be like really bad products. They're either complicated to use, or they have lots of restrictions. Like they advertise 4% cash back, but it's limited to like a few $100s. Or they advertise all these benefits, but you have to use this exchange, which has like really crazy fees in order to on and off ramp, and things like that. But the other benefit is, as I said, is Ether.fi is self-custodial. So if you're using exchange cards, you can still be debanked. Your assets can still be frozen. Your account can be locked, right? Which happens all the time with many exchanges. Whereas with Ether.fi, I mean, we can't lock your account. Your assets are yours. If we don't like what you're doing or whatever, I mean, there's nothing we can do. Like you are actually retaining custody of your asset, which I think is important. I mean, I think that you can't get liquidated in the way maybe certain exchanges have done recently. It just gives you a lot more control and safety.
I think for people that haven't tried it or are not familiar with how it works, the question would be, well, I kind of need money to be in the account to be able to spend it right now. So where does that money go? Let's say I want to put in $10,000 just in case I want to spend. Where does that money go? When you say you are still holding it, what does that even mean?
So it goes into a smart contract that is controlled by your wallet. So, for example, I mean, I don't know how familiar viewers, listeners are with like other DeFi projects, but let's say you take $10,000 in stable coins, or 5 ETH in crypto, and you put it into a product like Aave, right? Well, where those stable coins or that ETH is in a smart contract. It's not like Mr. Aave can show up and just like pull your money. Like, no, you're trusting the code that it's built on. So in the exact same way, you're putting your money into smart contracts that are controlled by your wallet. So you're trusting the code. You're not trusting any central entity to not take your money.
When I swipe the card, what really happened behind the scenes?
It's a long and complicated process. There's like 6 different entities, probably more, involved in every transaction. Step 1, you swipe the card, the merchant submits a transaction to try and charge you. That goes to Visa, that of course verifies that the card exists and is valid, which then eventually makes its way to our systems. Our systems look at your account and determine, like, okay, does this person actually have enough money to be able to spend? And then an on-chain transaction is submitted. So basically, like in the same way that you send Bitcoin or ETH or whatever, an on-chain transaction is submitted that approves that transaction, on your smart contract safe, and then funds are deducted from it. And then eventually, through a series of steps, that gets settled with Visa, and then Visa actually gives the money to the merchant. But at any point, you can withdraw all of the funds from the safe from Ether.fi, or you can lock it down and say, okay, I'm not allowing any more spending on the account. So those transactions only go through with your permission. As long as you're willing to allow the system to spend your money.
I heard this expert, a stablecoin expert from Singapore, he was on a show and then he was talking about how, stablecoin is better than the traditional fiat system because when you pay, there are 2 steps. One is the communication between 2 devices. One is the settlement. And for the traditional fiat system, the settlement is T plus however many days. And sometimes, the merchants have to wait for days to receive that money.
Or weeks or months, yeah.
Right. And for stablecoins, they just receive it right away because communication is settlement, which is that happening right now? Because we're still going through Visa.
Yeah, you're still going through Visa. So it's the same from the merchant standpoint. They still have to wait, depending on jurisdiction and how it's set up. They might wait days or weeks or longer for the transaction to settle. So this doesn't solve that. This helps the user. It really doesn't help the merchant. That's a longer term solution that needs to be implemented.
But in the ideal near future, what would it look like?
Yeah.
Are we going to skip Visa, MasterCard?
Yeah, and look, maybe they'll, not maybe, I'm sure they're going to look at their networks and, upgrade them to support, stablecoin transfers and, have these reduced fee models. So for sure, that's, that's going to happen. It's not going to be on the current kind of rails. Like Visa does useful things, right? There's fraud protection, right? There's things like chargebacks. There's, there's a lot of work that goes into. There's verifying merchants so that you don't have somebody gets your credit card number, they can just take all your money, right? Like there's a lot of protections behind the scenes that are valuable, and all of that stuff needs to be built right on chain before you can completely go direct to a merchant. So it sounds simple in a sense. This transaction, like you go to whatever an online merchant, you buy something and they get the money instantly. But like think about what that means. That means you can't reverse the transaction. It means there's less fraud protection. So it's not as simple as it sounds.
But is that the end game, or is that just a fantasy world?
Certainly, it'll reduce fees when you have an end-to-end crypto stablecoin system. It'll reduce fees quite a bit. But it's not going to be zero. But maybe it'll make them 80% lower. Certainly, it'll make settlements to some degree faster and more transparent. So it'll be better. But even today, just on the consumer side and the customer side, someone using the Ether.fi product, the user is already getting a huge benefit. The benefit they're getting is, one, obviously we talked about sort of the self-custody aspect of it, but they also just get much higher rewards on their asset, right? If you deposit your assets into Ether.fi on US dollars, this isn't a forward-looking projection, but historically users would have gotten 8 to 12% interest
That's
on
crazy.
their dollars.
Wow.
So it's analogous to a savings account that pays you 8 to 10%, 8 to 12% interest, and then a credit card that pays you 3% cash back. Like that's crazily better than a traditional bank, right? Like I don't know what your bank pays you. I don't even know what interest rate it is, but it's basically
It's so
zero.
little, I don't even know.
That's right. Yeah, it's basically zero. And, I don't know any TradFi credit card that pays you 3%. So just on that aspect of it, there's a huge benefit to users.
Where did that 8 to 12% come from?
So it comes from DeFi. Lots of different steps, but mostly it's like lending and token rewards. So mostly you're lending out your dollars to people who, want to borrow them, and you're getting token rewards from various partner protocols.
So if I need money, I can do the same thing on Ether.fi and lend money.
So it's indirect. I'm just saying you're depositing dollars into Ether.fi, and then you put it into our DeFi vaults, which earn whatever the interest rate is these days. Where that interest comes from is usually it puts it into various DeFi protocols, which are in most cases various forms of lending.
Right.
So there's no mystery about where does the yield come from. It comes from lending for the most part.
For users, what type of assets can be spent? Is it USDC only or other assets as well?
So you can deposit USDC, USDT, or these liquid strategy vaults, and you can also spend those assets. So this is the cool thing is you can hold your assets within DeFi and then actually spend it directly from there. So you don't need to do any complicated stuff with kind of like unwrapping, withdrawing, whatever. It's all kind of abstracted from you. So you can do something as simple as just put in USDC and spend that, or put it into this, DeFi strategy vaults that give you some rewards and then spend that directly.
And the rest will still be generating yield or...
Correct. Yeah. So your
revenue for
entire account balance could be generating DeFi yields, and then you sort of spend that as you go, or you can borrow against it. That's what a lot of people do.
Earlier, you talked about depositing US dollars. So if I am using a Taiwanese bank or any Asian banks, can I actually deposit fiat or USD into Ether.fi and start spending there?
If you support SWIFT or ACH or Fedwire or SEPA, I think, which most international banks do support, if you can wire money into a US dollar account, then yes, you can do that. So you can wire money from Hong Kong or Taiwan or whatever, and it'll work fine. It shows up usually within a couple of hours.
And it shows up as USD or USDC, USDT?
USDC. So it automatically one-to-one gets converted into stable coins. So you don't even need to think about any of the intermediaries.
I want to talk about Visa card and MasterCard. So they process more than, I think, 14 trillion a year, and they take about 1 to 3%. Is that correct?
Yeah, I mean, Visa takes, there's lots of intermediaries involved, right? There's like the issuing banks, there's partners, there's transaction, payment processors and so on. Yeah, I think Visa takes maybe a little less than 1% of the transaction value.
Amazon did around, I think, 600 billion in revenue and pays, let's say, 2% in card fees, and that's about $12 billion a year. This number comes from last year. So I think a lot of these retail giants, they're, considering building their own stable coin in private blockchains because they want to save on these fees. What do you think the trend is from, an expert's perspective? Do you think these big companies will start creating stablecoin systems of their own and then, kind of trap the funds within their own ecosystem? For example, if you're a partner that, gets paid, then you can spend that stable coin within that ecosystem on, let's say, cloud service or other services.
It's not hard to imagine a world where there's, thousands of these stable coins that, every merchant has their own kind of different variation of it. But it's also not hard to imagine most merchants just choosing to use a third-party option because they can still save that, 2 to 3% that they pay on merchant fees by using a third-party stablecoin. I mean, the thing with stablecoins is everyone's very excited about, these trillions of dollars that are going to be minted in stablecoins. But like running a stablecoin is actually not going to be a very good business because like the expectation will be that all of the yield, the underlying, treasury bill yield just gets passed on to your customers. So it very quickly is going to be a business that approaches, sort of zero margin.
Are we talking about the issuer?
The issuer of the stablecoin, yeah. So is Amazon or others or Walmart or whatever going to issue their own stablecoin? Like maybe that's possible. Like maybe they can, get users to hold a balance with them, right? We've seen that from places like Starbucks, right? They have their Starbucks app and gift cards that you can, preload and spend, and they have billions of dollars of customer deposits, which are earning no interest for their customers. But like it's also hard for me to imagine, users holding a balance with Amazon, with Walmart, with Costco, with whatever. Like, are you really going to hold balances across all of these different merchants? Like, probably not. So, are these merchants then going to, get much of a benefit from issuing their own stablecoin versus just using a third party, whether it's Circle or somebody else, using a third party stablecoin and not really worrying about it too much? Because what I was trying to say is I don't think stablecoin issuers are going to make that much money because the expectation is going to be, that you pass all of that yield onto your users. And so stablecoins will be basically like a zero margin product. So I don't know that Amazon is going to be too excited about issuing their own stablecoin. But I do think, what we talked about earlier, a lot of these payment networks transitioning to just direct stablecoin payments, I think that's, very reasonable because then, it saves the merchant, 2 to 3% on their transactions.
Regarding what you just said, but issuers like USDC, USDT, they are probably some of the most profitable companies in the world. So that is
today,
right now.
Yeah.
But later on, you foresee that they're gonna have less revenue.
Of course,
is that what you're saying?
First of all, like falling interest rates, as interest rates fall, their revenue goes down like directly. But then in addition to falling interest rates, the expectation will be that they pass on all of that interest to their users. That's not, today, maybe not even in a year, but that's the end game, right? Because that's just going to be the default.
So, okay, the Genius Act actually says issuers cannot pass on the yield to users, but I assume what you're saying is they're going to look for other ways.
Yeah, there's most of these alternative stable coins find ways of passing that yield to users indirectly. Like, I mean, there's different ways of doing it. Maybe the user stakes the stable coin, and then part of staking it is you get a reward that just happens to be exactly the same as the treasury bill yield, or even a little bit higher, right? We see most new stablecoin entrants boosting the reward, so they're actually paying out more than the interest that they're collecting in order to get adoption. So it actually becomes a loss leader in many cases. So so there's lots of loopholes that that allow stablecoin issuers to pay out that yield to users.
This is really interesting because I went on a few interviews, like local interviews, and they were asking, these are like brokers and more traditional finance people, and they're interested in investing in stablecoin related stock or other, things. But
Yeah.
right now, there are only a few. Like, it's very clear that it's only like, oh, Circle IPO'd and all that. But what else do you foresee in the future that would be worth paying attention to?
Yeah. So I think the meta that's really starting to heat up now is this category called crypto neobanks, kind of like Ether.fi. We're now seeing a number of these projects getting launched, seemingly almost daily. And to me, that's a much more interesting business than just stablecoin issuers, which again is I think over time is just going to get commoditized, and the margins end up going to zero pretty quickly. Whereas something like a crypto neobank is much more of like a picks and shovels play on stablecoins, in that there's a revenue model, there's users, there's distribution, there's all kinds of ancillary sources of revenue that products like Ether.fi have, that don't just rely on issuing the stable coin. So Ether.fi generates revenue from all transactions. So we take roughly 1% of interchange revenue from the merchant that we talked about earlier. We generate some returns if users are borrowing against their assets. So we take a spread on that. If users are doing swaps within the app, there's some revenue that comes from that. If users are depositing into DeFi, into these strategy vaults, there's a bit of revenue that Ether.fi generates off of that. And then in turn, staking rewards. So if you're staking your ETH, your BTC, Ether.fi generates some revenue there. And soon we're going to be launching something called Ether.fi Trade within the app that allows you to actually trade perps, using Hyperliquid. So there's a much more broadly diversified revenue business, in Ether.fi than just the stablecoin side of it.
Ooh, so what else? What else can I do on Ether.fi? Let's say I think ETH is going up and I don't want to sell it, but I need the money, so I can just borrow against my ETH. Is that correct?
Yeah, exactly. Yeah, that's a pretty common thing that people do.
Are people doing that now, or do they think ETH is going up?
Yeah. I mean, look, long term, I think it's a good bet. But yes, lots of people are doing that.
Okay, and a question a little bit more on the traditional network and also stablecoin. SWIFT has been around forever, and this is how banks move money across borders. It's kind of slow and it's pretty expensive, but do you think stablecoin is starting to chip away that SWIFT's influence and maybe completely in the future? If that is the case,
Yeah,
does that mean
100%. I mean, not yet, because the numbers are just very small relative to all of the Swift volume. But eventually, of course, yeah. I mean, it's so much better. I mean, it's obviously a superior model.
But like, for example, US, if they want to sanction other countries, they kind of use this system. And that means in the future, if SWIFT's influence is being weakened, then, this method, you can't really do that anymore.
I mean, in some ways, it's actually much easier to do those kinds of sanctions. Look, if you're using US dollars, the US government can get you. So, as an individual user, I mean, you have to get OFAC sanctioned is like you have to be doing some bad stuff. But if you're, a country or a bank and the U.S. wants to sanction you, it's actually very easy to do that with stable coins.
Any country stablecoin, should the government be allowed to, tell the issuer who should we sanction and who should we debank?
It's not a question of like should or shouldn't. That's just the reality of it. I mean, as long as you're using
That
US
is
dollars,
true.
if you fully want to get off the, TradFi system, you shouldn't be using dollars. If you're using something like Ether.fi, you're not going to get debanked, or it's extremely like the threshold for you to get debanked is very high. Like you have to like finance North Korea or something, or terrorism. Okay, then we're going to have to respect sanctions against you or whatever. But that's a very different threshold than you donate money to the wrong cause, and your bank suddenly says, we're shutting off your bank account, right? Which happens,
Has that happened?
all the time.
Really?
Well, of course, yeah, of course. I mean, that happens, all the time. I mean, it could be as simple as this doesn't happen anymore with the Trump administration, but. Honestly, it was before that. I mean, it was as simple as like you got money from a crypto exchange into your bank account.
True. And
like they would just turn your bank account off. Or in Canada, I lived in Canada for many years. There was during COVID, like this big protest that happened.
Right.
Canadian truckers were protesting COVID restrictions. And anybody that donated money to the Canadian truckers ended up having their bank accounts shut off.
That's insane.
Yeah, I mean, I had friends that they've been banking with some of the larger banks for years, decades, and then they just got completely shut off because they sent them a few $100. Yeah, I mean, this happened all the time to people. So those types of things, I can almost guarantee. I mean, they've never happened to anybody with Ether.fi because it's just it's again the threshold for getting like sanctioned, where like your your wallet addresses and identity is blocked is much higher than like just some bank saying we don't like this news article about you, so we're going to turn everything off for you. So most people don't realize when like every financial institution, every bank, basically every regulated financial institution has an entire department dedicated to compliance. Compliance basically is like obeying all the regulatory laws that are out there. And one of those things is called like every bank will have what's called something like a bad news division. Like literally they'll have a bad news division. And so they look for like articles online on, in like major publications, and they search for your name. So if you have an account with a bank, they're looking at all over the internet with, for articles and news about your name. And if your name pops up in a bad newspaper article, it goes to the compliance team and they review it and they say, oh, Bob here, like did something bad, like there's some, bad news story. Okay, let's shut off all his bank accounts because we don't want to be associated with Bob anymore.
That's insane.
It's such a dystopian thing. I mean, people criticize, China with their social credit system. Like the same shit exists in North America. Like every bank, as I said, has this division that searches your name all over the internet. And if you do something bad, they'll just turn stuff off. So that's the kind of stuff that this, crypto neobanking alternatives help prevent. In addition to not being able to just lock your bank account, right? Like that's the other, like the bank can turn off your bank, but they can also lock your money for whatever reason, and then you can't access it for years. They can also gamble with all of your money, and then if they lose it, then you're screwed, and the bank usually gets bailed out without any kind of transparency existing around that. So those are the things that this alternative system can help prevent.
You don't have a bad news department?
No, we don't. We do have a compliance department. Unfortunately,
right, of course.
Like we're subject to all the same kinds of laws, but it's not the same kind of like dystopian thing.
I think it's
exists otherwise.
comforting for most people to know that, the company is compliant. I guess that's like the basic, people want to be able to trust that whoever that's processing their money is following the rules.
Yeah. I mean, it's mostly, it's mostly theater, but theater in the sense that it's supposed to prevent, bad people from, using these financial
Of course.
systems. Like that's what the AML, anti-money laundering, and KYC, your customer laws are supposed to do, and they totally don't work. I mean, they don't prevent any of that. All they do is impose just a huge costs and burden, and create a bit of this like surveillance state for normal people. It's a little bit like the TSA after 9/11. Like it's just mostly security theater. It doesn't actually make anybody safer.
So what you're saying is people who want to do bad things can actually go around it easily.
The traditional systems, yeah, of course. I mean, what, like, bad people have bank accounts
Right.
and launder money all the time. It's not
What's
not even
a
particularly difficult.
what's a better system then?
Well, the better system is presumption of innocence. Like you let people engage in commerce, and if they do something bad, then you can go in and do investigations and try and freeze people's assets. If it's needed, but like you have to have evidence. Like you have to actually start with proof that the person did something bad, not sort of impose this sort of preemptive system of penalties and controls on everyone, with the hope that maybe you'll prevent some bad people from doing stuff. But the reality that it doesn't actually do any of that.
In practice, what would that look like? So you still do KYC, but then I think the problem is KYC. The process is expensive. Is that what you're saying?
I mean, that's a big question. Like, what does a better system look like? In a sense, for a very a lot of the history of finance, when people transacted with bearer assets or cash, there's no KYC when you do a cash transaction, right? With people, that's in many ways what crypto is kind of going back to, right? Going back to bearer assets, where if you have a wallet, if you have assets in that wallet that you can control, they're yours. I mean, there's nobody KYCs, which Bitcoin address has which, how much, Bitcoin. So going back to that kind of system, I don't know how much you actually lose as far as protections. I think, as I was saying, I think most of those protections that exist today are kind of theater. So you need to identify a person who did something bad, and then do investigations and identify, okay, this is the address where the bad thing happened, and then try and figure out how to restrict the movement of those assets.
Mike, I really enjoy this conversation. It's not just about Ether.fi. It's about, the future of money and also stablecoin. And I think a lot of, thoughts that are deeper than just money. So I really enjoyed it. And if people want to sign up, you can use the link down below. And if you refer friends, there's a program for you. You can get bonus and rewards and stuff. Lastly, I would love to have you back in the future if you'd like. And thank you so much for your time.
Yeah, great to be here. Great chatting with you. I agree. It was a great conversation.
Before we wrap up, here's something you will want to know. Ether.fi just launched their gold card, and there are only 30 cards in the world. Off camera, Mike actually told me he's giving 5 to our community, which is huge. If you want one, now's the time. Use the link down below to sign up and start spending. You'll get $25 instantly. And top 3 spenders will be invited to become gold card members, and we'll draw 2 more winners before Black Friday. So you can actually use the card for your holiday shopping and get your 4% cash back on everything, 5% on travel, up to 60% off hotels, plus exclusive concierge, VC investment access, and even direct contact with the Ether.fi leadership team. If you don't make the gold card list, you still get 3% cash back. So way above normal cards. I've got plenty of shopping to do. So if I'm spending anyway, I want to get paid for it. Okay, but just remember, this is DeFi and DeFi products have risks just like any other financial product. For spending, only keep what you plan to use. If you're going to try staking or borrowing, definitely do your research first. Only 30 gold cards exist and we've got 5. Check the description, claim your $25, and get your card before Black Friday and Christmas hit to earn that 4% cash back. Thank you very much, Mike.